And welcome to Ask the CPA, where no question, get this, is too taxing. So please call in. I'm Shelley Irwin, your host. In studio tonight, we have Dennis Echelbarger. The numbers are on the screen for that answer to your question, guaranteed. You know it. I'm glad you're here. EHTC is from where you practice, and I bet the first name is Echelbarger.
It is.
Glad you're here. Hey, why are we talking to you mid-December? Is that important, Dennis?
It's very important. We're very short time. Some things still could be done to at least minimize your 2014 taxes. And among that, there are things that we're not going to know probably till next year. But there are some things we can do this year.
Great. So let's begin with, I guess, a formal question. Because I think the goal is, yes, I have to pay taxes, but how do I lower that, number so that, take all my deductions so that I can pay the least amount if I'm trying to get out of it?
There are some specific things that both I and the Wall Street Journal recommend. One of them being there is, for certain income levels, a 3.8% investment surtax. And so if some income can be shifted either into 2014 or into 2015 to watch those levels, some of that can be saved. And that tax came about because of the Affordable Care Act.
Are you saying investment? Are you saying stocks, bonds, and mutual funds?
On interest, dividends, and capital gains. It's kind of a hidden thing. It is fully effective for 2014, and a lot of people are going to get some surprises. I did one client the other day where it was $125,000.
Because he or she did well.
Because he had some gains that were nothing he could do about it.
Yeah. So discuss that with my tax preparer. What else?
In addition to that, we talked about gains. One of the things that can be done is if you have some gains, whatever happened, and you happen to be holding some stocks or bonds that you have a loss in, take the loss, which offsets the gains. And if you wait 30 days, you can buy the same security back. You have to wait 30 days, though, or it's called a wash sale. For individuals, there is the alternative minimum tax out there in addition to all the other things.
And what is that?
It's a tax that the IRS has said, and Congress has said, yeah, we've got all these tax-saving events and all these things you can do, but once you compute your tax under the normal rates, you are going to pay a minimum tax. The level for single individuals is about $55,000 a year of income, and then the tax kicks in, and you compare the alternative minimum tax to your normal tax, and you pay the higher.
Great. Stand by on there. We actually have a question from a caller. Hi, question. What's your caller? What's your question, please?
My question is, my life insurance has a terminal illness clause. And when I exercise that, how does that impact me on a tax basis? And how does that impact financial aid for my children for college tuition? Say if I waited till after the first of the year, how would it impact their financial aid for next year?
Well, it's likely to affect one year or the other because the financial aid form calls for what was your income in the one you're filing soon in 2014. So if you went to get that money this year, it could affect this year. How is it going to affect next year? It will probably have some effect. If your children are your dependents, if they are not out on their own. From a income tax standpoint, most insurance proceeds are not taxable. Life insurance included, and this is a type of life insurance. But one of the things, if you're taking an early distribution, and I don't know what the policy exactly says, but If you're taking an early distribution, you have to look at how much money do you have invested in the policy compared to what you collect.
Thanks for calling, caller. Anything else on lowering my 2014 taxes, Dennis? We've got time.
Gifts.
Gifts.
2014, you can give, any individual can give as many other individuals as they want to, up to $14,000, and there is no gift tax. It's not taxable to the recipient, and the gift tax actually is imposed on the donor. But there is the exemption of $14,000 a year for as many individuals as you want. So if you want to, some people are at the point in their life where they want to get rid of some of their income that generates their assets that generate income, and so they gift X amount every year. If you go beyond the $14,000 to an individual, then it becomes a reduction of your lifetime exemption, which is combined with the estate tax.
Great. Tell me a little bit about estate taxes while I've got you there.
Estate tax is almost, for most people, non-existent. The exemption for a lifetime, if you don't use any of it up during your lifetime, is $5,400,000 in round numbers. Most people individually are not worth more than that, so when you die, if your estate's less than that, you have no estate tax. If you go beyond that, then there are some issues. But it's a very unfair tax. It's the government saying, thanks for doing a nice job, give me half of it. And it's taxed on the value, not income.
Yeah. Thank you for that. Here's a specific question. One was asked me to ask you, Dennis. What are the additional expired tax benefit extenders that affect my 2014 returns?
Yes.
Take that apart for me.
The so-called Bush tax cuts had expiration dates. Most of them, and they're all beneficial to the individual taxpayer, most of them expired in beginning of 2014. There was the indication that most of them that affected individuals are going to be renewed by now. They have not been. And some of them affect businesses too. It appears that, at least in my estimation, we're not going to see them renewed before year end. Now, there is a track record of having gone into the next year and Congress saying we'll do it retroactively. The problem with that is the IRS has issued the forms by the time this all happens. So the forms are wrong. It makes preparation just a nightmare, and most people don't know what happened. But the ones that have expired that could affect the 2014, because they did expire in beginning of 2014, was the educator expense, which was a deduction above the line, not an itemized deduction, that allowed educators to deduct up to $250 of costs that they incurred for their students. There is an item out there, mortgage debt forgiveness, which really was enacted in 2007 to avoid some of the problems that were generated by the downturn. That has expired, so if you happen to have had mortgage debt forgiveness in 2014, it could be income. Equalization of employer-provided commuter transit and parking issues, benefits are out there and could be taxable because that's expired. When you have a mortgage on your home and you've paid a premium for mortgage insurance because it was required, there is a deduction for that.
And that's going away.
But that's gone.
Okay.
Tax deduction for state and local general tax in lieu of sales tax, depending on which is higher, that's expired. Tuition and fee deduction for students up to $4,000, and that could be beyond graduation even, has expired.
Give me one more, and then we'll take a break.
Tax-free distributions from individual retirement plans, which has a big effect. What it allowed was you could have a contribution to a charity directly out of your IRA, not have to pick up the income and get no deduction, but what it saved was the tax that you would pay on the income less the deduction, so it saved something.
More questions I have for you. We're going to take a quick break, show you what's coming up next week. Right now, Ask the CPA. And next week, Ask the Veterinarian. Dr. Carol Robko will be with us, so stay tuned for that. Right now, Ask the CPA. Call in with your questions. Anything else when it comes to this Bush tax?
There are, yes, three more. The Work Opportunity Tax Credit, which affects a lot of employers and workers, that's gone unless they renew it. There is a deduction for businesses called the Section 179 expensing, which when they buy equipment for their business, they've been allowed to deduct up to $500,000 currently rather than depreciating it. That's gone to $25,000. That's $475,000 difference. And the tax credit for residential energy and those kinds of improvements has gone unless it's renewed.
That's why you need your continuing education. Tell me a little bit about contributions to the 401k plan and what that affects our tax base.
The contributions to the 401k plan for 2014 is at $17,500 is the maximum you can do, based on your income and your wages, your earned income, and a percentage. But the cap was $17,500 for 2014. In addition, if you're 50 years or older, you can add another $5,500 to that for 2014. Both of those numbers have gone up for 15 by $500, so it's another $1,000 that somebody can put away.
Great. Let's talk a little bit about mileage rates. Any changes? Any
just were issued this week. For 2014, the business deduction on your personal tax return is at 56 cents a mile. For 2015, it will go to 57.5 cents. In addition to that, there's the deduction for mileage for medical or moving purposes for 23 cents a mile for it's 23.5 cents a mile for 14 and 23 cents for 15. And then the standard mileage rate for donations stays at 22 cents a mile. So both of those affect your itemized deductions.
Wow. What are other important numbers for the 2015 tax year?
The rates were issued about a month ago.
And what does that mean?
As far as inflationary increases and so forth that the IRS announced. The highest tax rate for 2014 is 39.6%. It stays at that for 2015, but what they adjusted was the level of income where that highest rate kicks in. And it went from $406,750 in 14 to $413,000 in 15, so that's positive. Standard deduction is going for singles from $6,200 to $6,300. For married couples, $12,400 to $12,600. Personal exemption for 2014 will be $3,950. It's going to $4,000. I mentioned the alternative minimum tax for 2014. The level is taxable income of $52,800 for a single individual. That goes to $53,000. For a married filing joint, it's $82,100. Very low numbers, and $83,400 for 15.
Wow.
The one that's an issue out there, and I just saw the statistics that the IRS said at least 25% of the claims and payments made for the earned income credit are erroneous.
What is it? What happens then?
That's a problem.
Is that a redo?
And the IRS has already made those refunds, so those people that got an erroneous refund is going to have a problem. But the maximum credit for 2014 is $6,143, and for 15 it's $6,242. You wonder why these odd numbers. It's because they start with a number and then each year they adjust them for what they call inflation. There is the other one that affects probably a lot of people. If you have a flexible spending account with your employer, the amount you can put away for health care purposes for 2014 is $2,500. That's gone to $2,550 for 15. So those are the primary deductions for 2015 and the changes.
Speaking of health care, what about write-offs for health care expenses?
Yes. Not a lot of people get any benefit from that now because you subtract essentially almost, not for everything, but 10% of your, whatever your adjusted gross is on page 1 of the 1040, you subtract 10% of that from your total health care expenses before you have any deduction. The net amount of that is added to your other itemized deductions.
Another question via Facebook. What if I received a notice from the Michigan Department of Treasury questioning credits for 2010 and 2011? What does that mean, and what should I have done or do?
That's a problem, and it affects people who have donated to this TV station. All of the public contributions that had a credit on their Michigan income tax return, which went away at the end of 11 with the changes. The Michigan Department of Treasury, not all of them, but a lot of them sent a letter out saying, okay, you took a $200 credit, or you took a $100 credit, prove it. And there's been a lot of issue over that about the amount that was spent by Treasury to chase after a very little pickup for them. So what you should have done is, if you had the deduction, if you actually made the contribution to the public charity that was qualified, you needed to find that receipt or get a hold of the charity and get a receipt to prove to Treasury that you were entitled to it. If you couldn't, then you had to pay interest and tax back to the Michigan Department of Treasury. It caused a real big uproar because they spent thousands of dollars for something that they're not going to get a lot out of.
Yeah. You hear scams, those pretending to be from the IRS. If there's a problem, how am I going to be contacted officially?
You will never, and this is going on right now, you'll never get a phone call. Never. The IRS does not call taxpayers and say there's a problem unless they have been in contact with them through writing or in person already.
Okay.
So those calls that are out there, and I know several people who have gotten them, saying we're going to come after you or what, and people, I understand, they get excited. It is a scam.
And hence they would probably ask for a Social Security number.
Yes,
and,
correct. They're going to
What about an email?
No.
Okay.
They will not do that either unless you've had contact with them already in person or in mail.
So in person or mail would be my
That's the only
red
way
flag
that,
there.
yes. If it's not that way and it's a first contact or it's a follow-up to the first contact, don't even pay attention to it.
And why does that happen? What are the big red flags for us to watch out so that
If
doesn't happen?
you get a phone call or an email that says you owe taxes, ignore it.
And then on the other side, if there has been a problem and I'm being contacted the correct way, why? What are my red flags? What possibly could I have done wrong for an IRS agent to contact
it could
me?
be anything from they do random audits of some of your deductions, or it could be they have an information return, a 1099 or W-2 that they don't find on your tax return. It may be there, they just couldn't match it. Or they have, normally they'll call you in if there's other more serious issues.
Sure. Don't delay on those, right?
Don't ignore them.
Don't ignore them. How do I look for a CPA?
If you want
You're a dime a dozen.
a recommendation, you can go to MICPA, which is the Michigan Association of CPAs website, and you can get a referral.
So that's the Michigan organization, and obviously they would screen out the good from the...
Yes, and further, if that's not satisfactory, anybody who holds themselves out as a licensed to practice CPA has to have a license with the state of Michigan, and the licensing department has a listing of those people who have their license lifted.
So big dates to remember then, obviously December 31st, do what you need to do to minimize taxes, and then as we move into deadlines, we're looking April?
April 15th is basically the deadline. You can do some deductible items with a credit card in December yet. You may not pay it until next year, but if you used a credit card, you can use that.
Okay. So April 15th
15th.
by midnight. How does one get the extension?
There's a form, 4868, I believe, is the number. Form numbers I have a little problem with, but it's an automatic extension as long as you don't owe any tax.
That's right.
The extension can happen, and if you owe tax, you're going to have a penalty anyhow. But it's a filing of the extension, and you can do it electronically now. Most people are filing electronically.
That was going to be my next question, too. Even as a tax preparer, are you filing online for us?
Yes, absolutely. Most preparers do.
Positives and negatives?
No problem with electronic filing. The issue will be, do you want to have either pay or get a refund electronically, or do you want to do that by check? And a lot of people don't want the IRS to have access to their bank account, and that's what you need to do if you're going to use that part of it.
1.5 minutes left. What do we need to really know big time, Dennis?
The big thing is look at your income levels, know what the thresholds are. If you can control the taxable income level, you can avoid some of the tax, because some of the tax starts at certain levels. Or be aware that if you're going to use some of these expired tax provisions, it could be you won't get any benefit from it. But in the past, we've gotten benefit after the fact. I can't say what's going to happen, because there was an agreed-upon bill in Congress this month. Both parties agreed to, and the president said, if you put it on my desk, I will veto it. So I don't know what's going to happen.
Obviously, we have to trust our tax preparers, but is there a resource that we can go to learn a bit of this background, Dennis?
Yes. There's many resources. One of them being going on the IRS website, and irs.gov. And you can find forms, you can find instructions, you can find, if you want to spend the time, all the law. Sometimes you'll have a problem understanding it, because not every tax preparer understands all the law because of the way it's written, but it's a problem.
Great. And when your clients bring you all of their information, make sure we unwrap it, right?
Don't bring it in a shoebox. It'll cost you more money.
Another 30 seconds. Dennis, how do we find out more about your services?
EHTC.com or call us at 575-3482.
Great. Thanks. Thanks to you. Take care.